59.37, 38 or so. Here where the gap is to the upside, I guess, 59.40, 45. Um, Tomorrow we have, I think we have we have a 2-year FRN at 11:30. The morning data is not super important unless Kashkari says something really bearish. But German import prices might be a little bit. And then we have the MBA index, purchase index, which probably isn't going to see too dramatic of a shift, but maybe drop a little. We have Red Book, which could be significant if it were really bad, but I don't think it will. Prices are still pretty inflated. And then Richmond Fed and Dallas Services, both expected to do pretty well. Probably not going to be that bad either. And then a 17-week and a 2-year FRN at 11:30, a 5-year note at 1 o'clock, which could be important. And then FOMC minutes come out at 2 p.m., which probably don't matter at all. I don't think the Fed's going to say anything really surprising in the FOMC minutes, but I could see it being a stabilizer for price action until the release. So I kind of expect tomorrow will probably be pretty grindy. Seems there's a decent amount of support at 59.10, despite the gap that we left down there. Probably some resistance up around 59.40, 59.50 to the upside. Out here on futures, that could represent an actual test of the trend that we failed, which we still haven't tested yet. We did regain 59.27.50 here, 59.52.75 to the upside, the next significant resistance. Not a major resistance or anything, that's up at 6,000, but it could be somewhat important, especially if tomorrow ends up being kind of range bound into the FOMC minutes. Dollar climbed up today, and yields at the top end of the curve fell back a little bit, roughly to like Tuesday's low of last week. But not the 20 and 30, just the 10 falling back. The 10 falling back harder than the 20 and 30. We'll see if dollar continues up. It might into the GDP print. Remember, this is the second revision of the expected negative GDP, which came in at, I believe it was 2.3% on its initial revision, or its initial print. And this will be the first revision of that data, where analysts are still targeting negative 0.3% growth for the quarter, but for quarter one, but we'll see. I expect growth is still positive because deficit spending didn't really dry up until we hit the debt ceiling. And then the effects post debt ceiling, I think, are more likely to be recessionary indications. So commodities dropping a little bit, but oil had bounced back higher earlier today. I think it's recovered a little bit from over the weekend. Yeah, not a ton from Friday, but a little bit from Friday. So still up from Friday, but down from yesterday, and some of that on the back of possible additional sanctions on Russia mentioned by Trump. Gold down against the rising dollar. Silver also down. Copper down quite a bit, as trade deals with the EU and China possibly progress, although we've seen no evidence of that. Correlation not quite as low as it was at our last high, but still pushing down really hard today. Big moves in both 1 and 3 month correlation. So big push into the dispersion trade. Remember, NVIDIA, the last significant tech earnings is tomorrow. With so much dispersion trade probably leaning on that single earnings call, it would be very interesting if earnings were just kind of within expectations, because that would mean that the is overexposed and likely to shed delta post earnings. which would be, slightly bearish for Nvidia, but maybe more so for the indexes, which are kind of in a slippery position anyway. Forward yield on volatility pulled back to negative 3.44 here. And leverage on the carry actually down quite a bit from last Thursday, where it peaked at about 8.8. The high 8.8s, almost 8.9, down to 8.5 end of day today. Correlation on the 3-month falling really sharply. We noted that before, but bond volatility stayed elevated on Friday, might start falling alongside the drop in correlation, maybe through tomorrow. Still doesn't seem to be a lot of out of the money put demand. Skew rising, but still well below the average going back a couple of years. So we would probably still want to see short vol kind of turn around a bit more than it has. Still not a lot of leverage on longer dated, like 30 DTE, 45 DTE, 90 DTE puts. Most of the leverage still all the put leverage crowded around the short term, with, in possible volatility expectations being a little bit higher into the future. And we see that kind of on the VIX 3-month. It's around 21. Spot cash VIX at 19. Correlation rose between VIX and cash VIX. So possibly a little bit of a pullback in some of the short volatility positions in the near term, with today's move to the upside. But I do suspect that overall we're probably going to see more shorting on volatility further out. Broth should have done pretty well today. I think everything moved up. Russell and Dow up. Tech still kind of leading the way on the upside moves, but pretty good performance. And this is 2 days combined. This isn't just the single day move to the upside, because of the holiday move up also. But yeah, it doesn't look too bad. What the fuck was that? Fed Fund futures now pricing in 10 cuts for the September meeting, or 10 points of cuts for the September meeting. So basically pricing out the rate cut for September. We'll probably rotate this out to the January contracts this week. And then the bear steepener pulling back a lot of its gains at the end of last week, back to 0.469, 9% drop there. Pretty breadth looks pretty good across the S&P. I don't know about Russell and Nasdaq, but I'm sure they're not too bad. Nasdaq looks fine. Dow Jones Composite, pretty good with the exception of Boeing. Russell 2K, really only health tech kind of falling behind. Everything else doing really well. So pretty broad-based bounce here off of the 200 MA on the daily, which we did bounce off of on Friday. Testing the upside resistance here on the trends. Not quite as high as the prior high. And so we still have 59.47 above us that could act as resistance. But we did retest and break through the breakdown in the consolidating upside trend. And so right now, this carries a bullish bias into tomorrow at least. We'd be looking back towards that like 59.68 high that we got recently, for a breakout and a continuation to the upside. But yeah, I mean, so far bullish. That might be the new norm. Could be, yeah. Anyway, thank you guys so much for tuning in. I'll get the rest of the macro stuff out tonight with Pickles Picks, like GDP and PCE and all of that shit, and try to give you guys some of the research data. And then tonight's coverage also. So sorry for the delay on that. I drove like 19 hours yesterday and the day before, so I was scared to do them last night. But I don't think we had much today, so it wasn't a big deal. But I'll have all that out tonight into the end of the week for you guys. Yeah, no problem. Thank you all so much. I'll catch you later. Peace.